Hello everyone, I am Dr. Shikha Prasad, lecturer of economics from the Arihant College of Arts, Commerce and Science. Welcome. Today, in this video, I am going to explain you about the Reserve Bank of India. As this topic comes in front of us many times, so it is also a part of study of the courses of many school and college syllabus. So we can discuss on the Reserve Bank of India, and I will try to explain you all those things, objectives, functions and its committees of Reserve Bank of India in this video. So let's start about the topic. Reserve Bank of India. The Reserve Bank of India, that is also called RBI, is India's central bank, also known as Bankers Bank. The RBI controls monetary and other banking policies of the Indian government. So, in India, it is said that the Reserve Bank of India is the monetary authority who controls the money supply, and it is also known as the Bankers Bank. It helped the Indian government in making policies. The Reserve Bank of India was established on April 1st, 1935 in accordance with the Reserve Bank of India Act 1934. The Reserve Bank is permanently situated in Mumbai since 1937. So, the Reserve Bank, as it is discussed, it is established on 1st April 1935 according to the Act of Reserve Bank of India Act 1934, and it is now permanently situated in Mumbai since 1937. Central Bank of the country was nationalized on 1st June 1949. So these are few dates which is important for any examination purpose. Sometimes these questions are asked that when the Reserve Bank of India was established, when it was nationalized. So these are important from the point of examination. So the central bank of the country was nationalized on 1st January 1949, and since then it is fully owned by the government of India. It means on the Central Bank of India the full control was by the government, or it is owned by the government of India. Now come forward. Reserve Bank of India objectives. The primary objectives of RBI are to supervise and undertake initiatives for the financial sectors consisting of commercial bank, financial institutions and non-banking financial companies NBFCs. Now, the objectives of Central Bank of India or the Reserve Bank of India is to supervise and undertake initiatives for the financial sectors. All the financial institutions are working under the rule of the Reserve Banks of India. Reserve Bank of India is the head of all the financial institutions or non-banking financial companies. Some key initiatives are: first, restructuring bank inspections; second, fortifying the role of statutory auditors in the banking system. So, these are the initiatives taken by the Reserve Bank of India, that it restructuring bank inspection because it is head of the monetary institution, so it inspect different financial and non-banking financial institution time to time. Next, fortifying the role of statutory auditor in the banking system. Different banks working in India are audited by the RBI. Now, move forward. Organization structure of RBI. Central Board of Directors. Now, RBI has a board of directors, that is the Central Board of Director, and what is the structure of this organization is: who is the head? The governor is the head of that Central Board of Directors. Then deputy governor. Then it consists of executive directors. Then principal chief general managers. Then chief general managers. Then general managers. Then deputy general managers. Then assistant general managers. Then managers. Then assistant managers. Then support staff. So this is the structure, organization structure of RBI. And who is the head of this structure or board of directors is the governor. Now, functions of RBI. So, how the Reserve Bank of India function and what are its main important function. First, issuance of currency. As we know that it is the authority of RBI to issue currency notes, and it is the sole authority of RBI. No one financial institutions have the authority to issue notes. Now, RBI is the main and sole authority in India to issue currency notes under signatures of Governor of RBI. RBI distribute currency all across the nation with the help of currency chests. Now, as I have already explained you that RBI is the main or sole authority in India who issue currency notes and under the signature of the governor of RBI. As we know that the head of the board of directors or the structure, organizational structure, is the governor of RBI. So he has the power to issue currency note. RBI distribute these currency all across the nation with the help of currency chests. The next function of RBI is the banker to the government. Now, RBI is also known as the banker to the government because it provides loan and monetary help to the government with the help of an instrument known as way and means advances. It means when government needs some finance, then RBI work as a banker to the government. It will keep the deposits of the government in RBI, and it will provide loan and advances loan to the government when they need some monetary help. So it also called as a banker to the government because it will help government as a banker. Next, bankers bank. It means, as we know, that RBI is the head of all the banking and financial institutions working in the country. So one of the important functions that it does is to provide timely supply of credit to other banks whenever required by them through monetary instruments, and thus act as a lender of the last resort by providing financial assistance to banks. It also provides export credit refinance, liquidity adjustment facility, and MSF. Now, when government needs some monetary help, then RBI work as a banker. Let's assume that when other commercial banks and non-financial institutes need some financial help, then this RBI will also work as a banker to these commercial banks and other non-financial institutions. They work as a banker to the bank. When they need some credit facility, they need some monetary help, then the RBI will provide timely supply of credit to these banks. Now, coming to the next topic, controller of banks. As we know that RBI is the head of all the banking institutions, so it controls all the banking institutes. One of the greatest need of central bank was to control other banks and regulated them on the basis of the set guidelines so that there is no monopoly and timely credit is available to all the sectors of an economy. RBI, as a controller of the bank, issues directions, carries inspections on site as well as off site, and exercises management control. So, RBI control the money supply with the help of some instruments, and it set guidelines so that there is no monopoly and timely credit is available to all the sectors of the economy with the help of other financial institutes and banks. RBI work as a controller of the bank, so it issues directions and carries inspections. It can go through uh, the inspection with other banks, and it exercises management control. So Reserve Bank can has the power to inspect other banking institutes. Next function of RBI is the controller of credit. I think this is the most important function of the Reserve Bank of India, through which it exercises its power, and it shows how its policies will help the economy in controlling the credit creation. Liquidity is in the market is maintained by RBI, as it can fix interest rate, including bank rate, etc. Exercises selective credit control. There are various monetary tools such as change in cash reserve ratio, stipulation of margin on securities, directed credit guidelines, etc. are used for this purpose. It means for the purpose of controlling credit in the economy, which is created by the other commercial banks, central bank or the RBI will adopt some selective measures. That is, there are two measures to control this credit which is used by RBI, that is qualitative credit control and quantitative credit control, in which these are some instruments which can be used. That is, it raise the CRR, it will increase the SLR, that is statutory liquid ratio, open market operation, margin requirement. These are some instruments through which the RBI tries to control the credit creation in the economy. Somehow, when it need to increase the monetary supply, it will decreases these bank rate, CRR, SLR to increase the money supply in the economy. So it works as a controller of credit. Now the next point of the functions of the Reserve Bank of India is maintenance of external values. RBI is also responsible for maintaining external value of Indian currency. Now, what is the value of Indian currency in comparison to other currencies? It can be the responsibility. It is also a responsibility of RBI to control or maintain the value of Indian currency in comparison to the other currency, as well as the internal value of that currency. Maintaining foreign exchange reserves are held by RBI, and it also holds a wide power to regulate foreign exchange transactions under Foreign Exchange Management Act. Now, maintaining foreign exchange reserve are held by RBI, and it also hold a wide power to regulate foreign exchange. Now RBI not only has the power to maintain the value of the Indian currency in internal trade, or it has the power to regulate foreign exchange transaction so that the monetary value of the currency should be maintained. So these are some functions of the Reserve Bank of India. So Reserve Bank of India play all these functions to maintain stability in the economy, and it is responsible for whole monetary transactions in the economy. Thank you for watching this video. Thanks again.